Yeah, Diana said it would be a win if they got to 2% home price appreciation, sort of more normal economy.
Flat is probably more realistic.
What about inflation on their business in terms of what they're communicating to you? All the materials and obviously everything else and how that's impacting costs at this point.
So that's a really interesting topic because what that's actually forcing is a change in the entire business model. We're seeing more people go to prefabricated type, not necessarily homes, but panels and parts of homes, and it's really changed the dynamic of how housing is being built because the labor's not there. The availability to get materials, a lot of materials now are being sourced locally as opposed to buying that great German faucet. Well, now we're buying something that's bought here in the U.S. because we can't get it from Germany or we can't get it from a foreign country. So it's really changing how builders are thinking about the timeline of being able to produce their product because that's critically important.
Yeah, there were some comments from the builders last week or two about average size coming in a little bit in terms of McMansions. Lumber, though, we've talked about this a few times. It's come down so much. Is it being completely offset by, say, the cost of labor, for example?
I would say no, but having lumber come down the way it has, I think, is sort of an indicator of what's really going on in the market. That was a typical story of something that was completely constrained by by what happened during the pandemic. And yet the building trade was still moving at a very, very robust pace. So, of course, the lumber prices spiked. And now we're seeing that same amount of demand. By the way, there's an enormous amount of demand in this country for housing. We are 2 to 3 million houses short of what we need for true replacement value. So that sort of underpins the entire market. And I think that's something we need to keep in mind here.
You also have a pretty good read on small business. I was reminded here that you were the first to disperse the PPP loans back at the height of COVID. That was,
and we announced that here on CNBC.
Right. So how is small business feeling and doing right now?
You know, I've been saying for quite a while that even up through today, our small business clients probably have never felt better than they do right now. They have probably some of the best balance sheets they've ever had. They have more liquidity today than they've ever had before. Orders are full. Restaurants are full. Manufacturing has orders going out as far as the eye can see. And so I think it's a good economy for most small businesses. However, they are all taking in this news. They're listening to what's going on, and even though interest rates may not directly impact them or high gas prices may not directly impact them, they are definitely saying, hey, wait a minute, maybe things are going to slow down here. I need to be a little bit more cautious, which is what I think exactly is what the Fed wants to happen.
Yeah. And what about you? The way you're thinking, I mean, look, talk about a negative wealth effect. When people have money in the stock market, they may not be as willing to buy a new house and or consider building something. With the S&P down 3.3% just today. I mean, what's your sense? And how, again, back to sort of the idea of if you've navigated something like this in the past or if this is kind of new.
Look, we needed this. We can't live in an environment where prices just keep going up to the sky, where it costs $130 to fill up your car with gas, where your rent is going to go up at 20% a year. We cannot survive in this type of an environment. And so we needed some sort of a pullback. And yes, it's painful to watch it on the screen. But that's not really an indication of what's happening, I believe, at business level. I think personal finance is better now than it's ever been before. I think small businesses are better off today than they've ever been before. And I think this is all going to level off at some point in the future. I think the Fed is pushing really hard to control the things they can. They can't control everything. But for the things that they can control, I think they're really doing a good job of jawboning and getting the economy, getting everyone to slow down, not take as much risk as they may have in the past, and I believe that the market is going to react appropriately. I believe we will see lower rates before we see much, much more significantly higher rates.